Welcome to the Sand to Pearls Stock Market Commentary for market week ending January 31st, 2014. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.33 to 0.93, falling into slightly bearish territory. The total count of securities in bullish or bearish patterns fell 5% to 2,179. The count of bearish stocks increased 15%, while the count of stocks in bullish patterns decreased 20%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now one consecutive week in bearish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 250 points for the 14th decline in 26 weeks. At a positive 174.43 points, it has fallen below the October 2012 and the November 2011 tops and is now below all 8 tops above plus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 1 accumulation day and 5 distribution days. Of the other indexes, the S&P 500 Deposit Receipts and the Diamonds Trust both ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in distribution mode. Momentum. At Tuesday 114 close, we got a CCI 20 daily zero-line reject entry. At Friday 124 close, it dropped below the plus 100, so we exit the trade at next Monday's open. The result of this trade simulation was a loss of 102.36 on the Nasdaq Composite, or a $2.04 per share of QQQ. The CCI 20 now has 6 days below zero, so a downtrend has begun. However, we are outside the plus or minus 50 range for a valid zero-line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 50 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly has now dropped below plus 100, but remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. 4 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, computer hardware remains in the top 5. REITs has entered the top 5. Oil services remains in the bottom 5. Gold and silver has left the top 5. Bearish, S&P retail remains in the bottom 5. Banks and brokers have entered the bottom 5. Disk drives and networkers have left the top 5. Oil has left the bottom 5. Focus this week, explaining January's volatility in one chart. In a month of disturbing images from troubled countries in all parts of the developing world, the biggest threat to the global economy may have been lurking in the shadows. And scrolling down, here is the chart. Thank you for joining us for this week's Sand to Pearls Stock Market Commentary. Hoping that your favorite team wins the Super Bowl and that you're having a great weekend. We also hope that you have a great week coming up and wish you true success.